Welcome to Manifested e-learning platform. Today we are discussing on taxation of dividends. Number one is to understand what is dividends. We need to understand that dividends is an investment income. So what is dividends? We say that dividends is profit distribution to by a limited company to the owners of the company who are also known as the shareholders. So we say that dividend income is basically profit distribution by a limited company to the shareholders or owners of the company. So we say that dividend income, we say that dividend income is what you call profit distribution by a limited company to the shareholders. That is what you call dividend income. Dividend income is basically profit distribution by a limited company to the shareholders. But based on taxation, we basically say that dividend income is basically described in three categories. We have what we call dividend income exempted from tax. We have what we call qualifying dividends. And then we have what we call non-qualifying dividends. So we say that for tax purpose, dividends are classified. We say into three categories. For tax purpose, we have the dividends being classified into three categories. We have one, what we call dividends exempted from tax. We have number two, what we call qualifying dividends. And then we have number three, what we call non-qualifying. We call it non-qualifying dividends. We have number three, what we call non-qualifying dividends. So we start with the first one. We can talk about what we call dividends exempted from tax. When you say dividends exempted from tax, these are dividends that are not charged tax at all. And we know for sure that one of the dividends that is basically not charged tax at all is dividends from outside the country. Instead of saying outside the country, we can say that dividends from abroad. We call them dividends from abroad. And we say that dividends received by a limited company, where the paying company control more than 12.5% of the shares. So we're saying that dividends received from a limited company, where it controls more than 12.5% of the paying company. So dividends received by a limited company where it controls more than 12.5% of the paying company. Then lastly, we say that dividends received by an insurance company from its life insurance fund. So we can say dividends, we start with the first one. We call it one, dividends exempted from tax. So we say that these are dividends which are not charged tax at all. So we don't charge these dividends tax. We do not subject them to tax. So categories we have: one, they include, we just say they include. One, we call it dividends, dividends from abroad. From abroad. If the word abroad is not given, we just simply say that dividends from what you call the outside the country. Dividends from outside the country. We say the dividends from outside the country. That is the second category. Then we say that dividends received, dividends received by a limited company, by a limited company, dividends received by a limited company that controls, we say more than 12.5% of the paying company, more than the 12% of the paying company. So we say that dividends received by a limited company that controls more than 12.5% of the paying company. And when you talk about such forms of company, we know that e.g., we can note that e.g., we have subsidiary, we have the subsidiary, we have associates, and we have joint venture. So when you talk about joint venture is basically 50-50, owning of 50-50. But when you talk about subsidiary, you own 50% and above. When you talk about associate, not less than 20%, but not more than 50%. So when you receive dividends from subsidiary, from associate and joint venture, those are dividends that are exempted from tax. Then lastly, we say dividends. Dividends received by life insurance company from its life fund. Dividends received by life insurance company from its life fund. That is the first category of dividends. The second category, we call it, we have that as number 2, we call it qualifying. We call it qualifying dividends. We call the second category, we call it qualifying dividends. So when you talk about qualifying dividends, we're basically saying that qualifying dividends, these are dividends where 5% withholding tax is final. Where we say 5% of the withholding tax is basically final. When 5% of the withholding tax is deducted, we don't subject it to further taxation. The 5% withholding tax is basically final. Or what you say, when you say final tax, we don't subject the income to further taxation. These are dividends. These are dividends. Where withholding tax of 5% is what we call final tax. And remember, when you say final tax, then we don't subject those dividends to further taxation. Once the 5% has been deducted, then that is final. It is not subjected. It is not subjected to further. It is not subjected to further tax. It is not subjected to further tax. They include, we say that they include. So the key word is that, when you talk about qualifying, the 5% withholding tax is final. Once the 5% withholding tax has been deducted, then we do not subject these dividends to further taxation. So we say that dividends received, number one, is from limited companies. Limited companies. Dividends that are received from limited company, the 5% withholding tax is final. But we need to remember that for non-resident, the withholding tax should be about 10%. Then you can talk about what you call listed companies. Listed company. And lastly, we have what you call dividends that are received from SACCOs. SACCOs are saving and credit. Saving and credit. What you call saving and credit cooperative society. That is saving and credit. What you call credit cooperative society. Saving and credit cooperative society. So when you receive dividends from these sources, we are basically saying that the 5% withholding tax is final, and therefore we do not subject them to further taxation. We do not subject them to further taxation. So 5%, but you said for the non-resident, the withholding is about 10%. Then you talk about what you call non-qualifying. The last category is what you call non-qualifying dividends. So when you talk about non-qualifying dividends, we are saying that the 15% withholding tax is not final. That once the 15% withholding tax has been deducted, we're still subjected to further taxation. The 15% withholding tax is not final. Once we have deducted the 15% withholding tax, then we still subject these dividends to further taxation. And remember, when you're subjecting them to further taxation, we subject them to further taxation at the gross value. We subject them to further taxation as the gross value. Suppose an examiner says that these dividends from X source, and that X source we know is non-qualifying, then if it's given net, we need to get the gross figure, and that gross figure is what we subject to further taxation. But key point to understand is that the 15% withholding tax is not final. We still subject them to further taxation. These are dividends. These are dividends. These are dividends where, we say where, 15% withholding tax, 15% withholding tax is not final. The key word is that 15% withholding tax is not final. They are subject to further tax. They are subjected to further tax. They're subjected to further tax once received by what you call the recipient. They're subjected to further taxation once they are received by the recipient. So we need to understand that how do we subject them to further taxation? We subject them to taxation at the gross figure. So we need to understand further tax is usually further taxation is usually through, we say through adding the gross, what you call the gross. It is through adding the gross, what you call the gross dividends, to other taxpayers, taxable income, to other taxpayers taxable income, adding the gross figure of the income to other taxpayers taxable income. Those are basically incomes that are subjected to tax, to other taxpayers taxable income. So we need to understand that withholding tax from the source, withholding tax from the source, is deducted, we say as a tax credit, That at the end of the year, you'll remember that there was a 5% that was already deducted. So it's deducted, the withholding tax from the source is deducted as a tax credit from the actual tax, as a tax credit from the actual, we say from what we call the actual tax, from the actual tax payable. So you need to less that because 15% was already deducted. 15% was already deducted. But remember, very keen, we talked about that when you're adding these dividends for further taxation, we add it at gross. We add the figure at gross. So suppose, how do we get the gross figure? Gross dividends. We say gross dividends is basically determined as follows. So the gross dividends is determined as follows. So when you have the net, we'll say the gross dividends, we'll say that the gross dividends is equals to net dividends times 100% over 85. So implying that when you look at this, the net dividends is 85%. So when you want to gross figure, the gross figure is going to be 100% over 85 times the net dividends, because the net dividends is represented by 85%. Remember, these dividends, we have a withholding tax of 15% from the source, 15% being deducted at the source, which I've also talked about, saying that we less that 15% as a tax credit from the actual tax payable. So lastly, we talk about example. Example include what you call dividends, includes dividends from what you call cooperative societies, society other than SACCOs. So cooperative societies other than SACCOs. I think the main issue maybe for learners that learners normally ask, what are these, how do I know it's cooperative society other than SACCOs? Because the word SACCOs will not be used, but you say, if you just talk about Mtandao cooperative, that is a non-qualifying dividends. And the 15% withholding tax is not final. We're still subject, it to further taxation. And when we're subjecting to further taxation, we subject it at the gross figure. Say that dividends from cooperative societies other than SACCOs. That is basically what we have on taxation of dividends.